Inflation is nothing like it was under Joe Biden. Some of this affordability that people are feeling is still those prices that never essentially came down because of Biden's 9.1% inflation. So we're headed in the right direction, but we're thinking about the Fed today. 25 basis point cut seems to be baked into this cake. Good, bad, Mike? Expectations? Is it really all about what they say moving forward?
So I'm like wildly perplexed why the market is looking into forward statements from Jerome Powell, because they don't matter, right? And if you look at where expectations are, we are going, like, you're not really above a 50% chance for a rate cut until June, right? Which is, Jerome Powell's last day is May 15th. We're going to have a new Fed chair. That new Fed chair is probably going to cut rates off the bat. How much? It remains to be seen, but the next 25 basis points is not predicted more than 50% as of this moment until the middle of next year. Okay, so that takes away my agita or my angst about whatever Powell's going to say in this. Okay, we haven't gotten a lot of government data, and I would say with shutdowns like this and the problems with the government collecting the data, repurposing it, it's about as reliable as gas station sushi, especially from the employment numbers. So you looked at true inflation, and true inflation saying we're about 2.5% is the inflation rate right now, which I think jives, right? I think maybe you could say it's as low as 2.3, as high as 2.7, 2.8, but we're right in there, and the question becomes, okay, from here we're going to get to 3.5%, so we're roughly 100 basis points restricted.
Okay.
How restrictive do we want to be? How restrictive do we need to be to get inflation under control? And by the time there is a new Fed chair, 6 months from now, what does that look like? And a lot can change in 6 months, especially with all the different policy things that are going on around us, although government spending has not come down one iota. So,
all right. I agree with all that. The only one thing that I would say is...
So I would say that when you're looking at the slope of the yield curve, the difference between short-term and long-term interest rates, two components, inflation and growth. Okay, this is the first time we're looking at a year where you realistically could have 4% GDP growth next year. Okay, that's not coming out of a massive recession. All these other rate cutting cycles have been into economic deceleration. So there's been a flight to quality. So in that flight to quality, you want as much duration or as much interest rate sensitivity as possible. That's not the case right now. And I don't know that for consumer borrowing rates, that long-term rates need to go down. I think you need more bank balance sheet availability. Banks have been stressed since Silicon Valley Bank, right? It's been a knock-on effect. There was a big problem in the repo market, which I thought caused the sell-off in these risk assets and Bitcoin that we had going into this government shutdown. The Treasury general account went from $600 billion to $1.1 trillion. So if the Fed bought $500 billion worth of bonds in a 6-week period, that would boost stocks. Okay, works the other way. And so I think as short-term rates coming down, you're going to increase net interest margins. Okay, and you're going to see more bank balance sheet availability. With more bank balance sheet availability, there's more room for asset-backed loans, autos, and credit cards. It should push these rates down. We'll see if that ends up happening.
This has been going on since last September. They have not passed on the lower borrowing cost to consumers.
Yeah, but you still have a stressed repo market, and if we move like by this, there's definitely a lag to that for various reasons. But if the short-term rates a year from now are 2.75, okay, you're going to see a lot more bank balance sheet availability. And the other aspect of that we've had the entire time until literally 10 days ago was the Fed balance sheet runoff, right? So on December 1st, you went from quantitative tightening to quantitative easing, and that's going to pick up over the next year, which I think will create more bank balance sheet availability. And if there's not enough shelf space, so that, my barometer for this, you look at the 30-year mortgage, the spread between the 30-year and the 10-year Treasury should be 175 basis points. It's been as high as 300. Okay, right now we're tracking at 250, so there's an extra 75 basis points in there. So the 10-year Treasury doesn't really need to move that much for 30-year fixed rates to come down substantially. And so I think that's what will happen. I hope that's what will happen.
I'm talking about credit card rates. Credit card rates haven't. I disagree. J.P. Morgan has given me naught on
billing it. How can I square those two? I finally come bearing gifts on this near Christmas morning.
Chart.
Jackie, a chart of the day. This, I think, helps explain to me why this is the tale of two economies. 67% of GDP is AI spending on data centers. The rest of it is stuff like you and me. So I think that is where that disconnect is coming and why the Fed is thinking we need to cut. If you take out the AI CapEx spending, this economy doesn't look so good. That's the slowing in the labor market that I think people like us feel and the real people on the ground are feeling, even though the traditional numbers, a 3.5% GDP, looks good. It's being fueled by the AI CapEx tech spending, most of it. So I think that is maybe in part why the Fed is looking at this underneath the headline numbers. There's something softer going on. And I finally found a chart and read something that kind of explained, I think I've been trying to figure out, how do I cut rates if I'm looking at 3.5% GDP?
It's been this case for years that if you're not if you don't have a lot of financial assets, so if you look at the stock market in 2023, S&P 500, the S&P 493 is flat. The broad market index was up like 15%. Right, I might be off with the memory; it's not as what it used to be, but the story has been AI, and the rest of the economy has been slugging along. Right, we're not contracting, not really growing that much, and so if you don't have a nice stock market portfolio, you don't own a lot of real estate, this is not a good economy for you. Yes, some relief is on the way with the withholding tables for their tax and tips.
Yeah.
So, and then also the immediate depreciation, but it takes time for that stuff to kick in and for that multiplier effect to happen.
Yeah, we've been saying that. And also historic.
Is an American company, right? They've done pretty okay with the electric vehicles. But to be fair to the auto executives, anybody that pushed back in the Biden administration, they try to throw you in jail. I mean, look at Eric Adams. They tried to indict him for getting flight upgrades many years before he was mayor. So it's easy for us to sit here and say this, but for Elon being somewhat critical of that administration, you have the National Transportation Safety Board, you have the FTC, the SEC, every government agency went after him and attacked him. And so you're put in a tough spot when you basically have a quasi-communist government coming after you. That being said, this started, this EV disaster with the Detroit, with the automakers, U.S. automakers, started long before that. How can you get into business and just assume that because Tesla's having success in this market that you're going to have success there? The U.S. automakers are neither agile, they're not ahead of the curve. They don't need to be. They make awesome, big, gas guzzling trucks and SUVs. They're the highest margin products. They don't need to move away from it, maybe to compete in Europe.
Wait, you're not on board with tiny cars? The president is big time on board with teeny tiny cars.
Well, you know why they make so much money on them, because of the pickup trucks, because of the chicken tax, because of the 25% tariff that's been in place for 60 years. That's why.
Yeah, so it's there's no need to enter these new markets where you cannot compete. And if you listen to Elon talk about his company, the real product there is the assembly line. And when you can start over and you can start from scratch with a clean slate, and you're an engineering company at its heart and a technology company at your heart, you're always going to be ahead of these legacy automakers. So this was never, ever, ever going to work out well for Detroit. And now these chickens are starting to come home to roost.
Well, I don't know how you get more innovative.
Stock perspective, is this a company that you buy on the dip, you believe in them long term, or is this an idiosyncratic issue, or we're staying away because we're talking about a slowing down consumer? How do you view all this?
I view this as a management team and a board. It's an unmitigated disaster. Just unmitigated disaster. And why would you join the board of a company or the management team if you hate the underlying customer? Because that's what this is, right? This is why these companies go woke, is because they hate middle America, and they hate the people that buy their products, and they want new people to come out and buy their products, right? And so instead of trying to take additional share, this is what they do. Just compare this to American Eagle with Sydney Sweeney, right? Why wouldn't Cracker Barrel just back up the truck and just start showing Sydney Sweeney eating in these restaurants? It's really an easy fix to be we hear you. we're going back to what works.
Michael Lee,
can't.
Chief Marketing Officer.
can't
Hire
fix it,
Sydney
though.
Sweeney for everything.
No, but you can't fix it because once the bell is rung, people understand that when you go try to fix it, it's not authentic anymore. So I disagree with you. You shouldn't make the mistake in the first place, but you're right in that you should cater to your customer and understand.
That's it.
I-
It's a restaurant.
American Eagle up 100, stock up 125% in 3 months.
Sydney
If you're
Sweeney can't
running-
advertise for everyone.
If you're running a business, give them what they want. Fix the food.
Right. So, okay. So you got decent clothes on, but you stink.
Right.
Do you think I can get my lifting chalk through security? Or they're going to confuse it for some other white stuff?
They will supply it for you.
You look like you
hopefully.
lift
Now and again.
rugby.
Yes.
Michael Lee, come
Wrestling.
on.
Oh, I had a jiu-jitsu tournament this weekend, competed against a WWE superstar. It went about as well as you can think it went.
No way, really? Who'd you go up against?
Baron Corbin, his name is Tom Pestock.
No kidding.
Great guy.
Wow.
A lot better than me.
He'll be deadlifting at the airport.
Yeah.
He'll have like, like
That's right. I just need to get
barbell
my
out
chalk
there.
right through the.
So how do you think this will go? My exercise is running. What if I run, sprint, screaming through the airport? Just, how
to
long
scream?
before I get arrested?
I would pay to see that.
Right? It's sprinting.
You know, based on JFK yesterday, you'll fit right in, right?
It is better than the current situation where people are pretty angry. You've talked about the angry people that sit